Good evening. Could you please tell me that where should I give you the answers for the questions? You can type it in the chat, sir. That is where you can give the answers. So I'll pick the baton from where Ganesh has left it. I hope I am audible and you are able to see my screen also. So let's discuss the next aspects of the concept of supply, because the taxable event is what we are discussing. So the next aspect of the concept of supply is, you would have already taken you through what is the general supply and what is the import of service and how that will become a supply for the purpose of section 7 subsection 1 clause B. Now what we are going to see is those transactions which, even if it is not coming under the first two category, it is neither getting satisfied under general nor coming under import of service, but department says, I want you to pay GST on that. How do they say that? They say it by way of notifying those transactions under Schedule 1. So what is this Schedule 1 called as? Schedule where the activities done even without consideration, supply of goods or supply of services done without consideration, is considered to be a supply. So which in other words we can call in easy terms as deemed supply. So deemed supply is what we are going to focus for the next few minutes. So in this transaction, what is lacking is there is no consideration. What you would have seen in case of general supply is that it could be a barter, exchange, sale, transfer, leasing, licensing, renting, disposal for a consideration in the course or furtherance of business. That is when it had become a deemed supply. It had become a general supply. But when it will become a deemed supply is when there is no consideration, but the rest of the things are there. But even if there is no consideration, it will fall under the category of deemed supply, Schedule 1. First such instance is permanent transfer or disposal of business assets. The word business asset is being interpreted differently, but the intention of the law I want to communicate, business asset would mean all your inventory, because that is also a current asset. Business asset would mean all your plant and machinery also, your fixed asset or your current asset, anything which is part of your business. So don't get misled by the word asset and think it is applicable only for balance sheet items. No, it is applicable even for our stock, because permanent transfer or disposal of business assets where I have availed input tax credit. So if I am giving one of the company's asset free to somebody, am I liable to pay GST? If this is the question that comes before you, when I am giving the goods free to somebody, am I liable to pay GST? The answer is no, if you have not taken ITC. Because giving it free is your right, your prerogative. You can give it free. But if you have taken ITC, then it becomes a deemed supply. Sir, I have not taken ITC, I have got it and I am giving it free to somebody. It is never a supply. So anything that I give will become a supply? Not necessary. If there is not going to be an ITC that you have taken and you are giving it free, there is no supply. So for a free transaction to become a supply, what is the ingredient? That is what is dealt with in this first para to Schedule 1. It says that if you have taken input tax credit, if you have availed input tax credit, then it becomes a supply. So if you have not availed input tax credit, then it is not considered as a supply. Even though there is no consideration, department will forcefully see it as a supply if you have availed ITC. In a corporate environment, example, we are buying New Year diaries, which we are giving to our customers. There are diverse views on this. I will give you my view. When that is procured, it is given free. When it is given free to somebody, can you avail ITC on it? First question, sir, I have availed ITC, then what should I do? If you have availed ITC, when you give it free, you are supposed to call it as deemed supply. If you don't avail ITC, you give it as free, GST is never going to interfere. So that is the importance of this first para, which says any business asset which is given without consideration, where input tax credit is availed, it can become a problem. If ITC is not availed, then we don't have an issue at all. It will not come into picture. So where this we have to be careful is, there are two things that are there in the business. One is called free sample. The other one is called gift. Free sample is what I manufacture, I give. Gift is what I buy, I give. In case of gift, you will safely not avail input tax credit, escape this. But when it is given as free sample, you have already taken ITC on the raw material and various other things associated with manufacturing it. Then when you are giving it as free sample, it is deemed to be a supply. You are liable to pay GST on that. Now, I've given a simple example. Go through this example. Don't give me an answer. Hold on to your answer. We will see this same example after we discuss Schedule 1. That time, you give me the answer. You will see the change in your answers. On the day of retirement of one Mr. Paranjodi from NVP Limited as CEO, he is retiring as a CEO. The company decides to gift him the car and the laptop. The car that he has been using and the laptop that which he has been using is given to him free. While performing the official duties, he was using it. So they have said, you please take it, sir, and this is your parting gift. Now, is this liable? Is there a taxability on this car and laptop? Please think. You did not give me an answer in the chat box. Please think over this. I will come back to this question after we discuss para 2. So now we move to the second para to Schedule 1. Second para to Schedule 1 says that the supply of goods or services are both. So the main distinction between first para and the second para is, first para was dealing only with goods because it was using the word business assets. So it was applicable only for goods. The second para is applicable for both goods as well as services. When you are supplying goods or services or both between related persons and or between distinct persons, if it is made in the course or furtherance of your business, any goods or service, if we are supplying to related persons or we are supplying to distinct persons, then even if there is no consideration, department will deem it as supply. Who are these two people? Who is considered as related person and who is considered as distinct person? This is the analysis that we are going to do next. Who is a related person and who is a distinct person? Let's go through that. A related person is defined under Section 15 of the CGST Act as an explanation. Section 15 of the CGST Act explanation says who is a related person. Okay, if my voice is breaking, I will stop my video. That will help in terms of the bandwidth. Who is the person who is considered to be a related person? As I said, Section 15 explanation says that the following persons will be deemed to be related persons. Let's go one by one. So who's it who is considered to be? Are you able to hear now clearly? I think I'm having some internet issues. Just give me a minute. I will repeat. Give me a minute. Mr. Ashwin, yes, what is it that you want to ask?
So the chat control is not with you here. I'm unable to actually send any message to you or anything. Are you still controlling the chat?
Sorry, what do you mean by that? Yeah. I'm not able to unmute you. Maybe you have muted at your end. So I'll repeat again. Tell me if you have a problem in hearing.
I can hear you clearly, but the video is sometimes stuck.
Okay, that is why I stopped the video. to enable that only.
And the chat box is not enabled to you. The chat box still shows only Ganesh sir's name.
But I am able to receive from others.
Okay, then I'll look into it. Sorry.
Please
Go ahead.
Okay, let's continue. So we'll go back to the previous slide. I think that is where the voice breaking and the lack of clarity happened in the audio. Deemed supply, the second transaction is supply of goods or services between any related person or distinct person. So this, as I said, is covering both goods and the services, not just goods as it was in the case of first para. Any goods or services, if I am dealing with related person or distinct person, without the consideration, department will deem it to be a supply if it is in the course or furtherance of business. So we have to identify who are those two people, who is a related person, who is a distinct person. Then when we are doing transaction with those related person or distinct person, we need to identify as to if it is done without consideration, can the department say that it is a supply at a later point of time. As I said, the related person definition is available in section 15, explanation to section 15 of the IGST Act. It says, 1. Such persons are officers or directors of one another's business. Such persons are officers or directors of one another's business, then they are considered to be related persons. So if we are officers or directors of one another's business, we are considered to be related persons. The second one is such persons are legally recognized partners. Now, we are looking at two definitions. Section 15 deals with related person. Section 25 deals with distinct person. So we are first finishing related person and then we will see distinct person as per section 25. So section 15 talks about related person. The explanation, as I said, if they are officers or directors of one another's business, you are the director in my company and I am your director in your company, then both of us are considered to be related person. But you have to be carefully understanding this provision. A director is not a related person unless he is satisfying some other condition. A director and a company are not a related person from so far what we have seen. Moving to the next one, such persons are legally recognized partners. Now, the word that I want to lay stress on, legally recognized partners, because income tax, there is an assessment procedure called AOP or BOI, Association of Persons or Body of Individuals. What does it lay there? In some of the cases, even in case of flat association, income tax says, if there is a method in which they want to share the profit, then we will recognize them as people who are partners, but that is only from an income tax angle. So who is considered to be related party is when two people or more than two people come together, they have in their mind the intention to become partners and they become partners, then only they are called as legally recognized partners. They are only considered to be related person. And the third one, the most important one, I would say, is such persons are employer and employee. If such persons are employer and employee, done. You are considered to be related person. Now, this is where I told you a director who is an executive director will become a related person. But a director who is an independent director will not become a related person. Why? Because it didn't say a director, the first point, it did not say director and the company are related. It is saying if you are officers and directors of one another's business. So a director and a company will not become related by the first point, but by the third point, an executive director can become a related person. That is the importance of the third point. Now, moving to the next aspect. What is the further definition of related person? The definition further goes saying that persons shall be deemed to be related persons if any person directly or indirectly, the words borrowed from the income tax law, directly or indirectly owns or controls, the key percentage is 25%. If they directly or indirectly own or control 25% or more of the outstanding voting stock or shares, I will hold, my father holds, my wife holds, together we hold more than 25%, then we become related person to that organization. A partner who is 1/4 partner in a firm becomes a related person. So the 25% holding plays a key role in determining the relationship. So one company to other company, the holding is less than 25%. We can say as per GST, they are not related person, but it is lesser than that. Then you become, it is more than that, more than 25%, 25% or more. Then you become related persons. And the next one is one of them directly or indirectly controls the other. I don't hold 25%, but I have the right to control you. Could be any way. For example, a financial institution has taken over, or one company is holding the complete control of the other company, including the appointment of board of directors. One organization is floated by the other organization. Then the main organization becomes the one who can directly control whole of the organization. Then it becomes a situation of related person. Why are we discussing this? Because once when we know who are related person, when we do such a transaction, we have to know that if it is done without consideration, we are liable for deemed supply. The next aspect is that both of them are directly or indirectly controlled by a third person. That is, we are fellow subsidiaries. You are also controlled by the same holding company. I am also controlled by the same holding company. Then we are called as fellow subsidiaries. We become related persons. Together, they directly or indirectly control a third person, joint venture. You hold 49%, I hold 51%. So together, directly or indirectly, we control the other party. Then also we become related persons. And finally, they are members of the same family. This is the reason why they have safely used this term related person, because generally relative is also a related person, but it is relative only defined in the 8th point as related person. Rest of the 7 points, they talk about other than individual, corporate kind of relationship, or relationship which are governed by a body corporate. That is what is discussed for 7 points. So if you are coming under any of this category, as I said earlier, income tax will guide you. Where you are able to say in income tax, you are a related party or an associated enterprise. Same logic you can bring it to GST with only one exception or one correction. 25% is the holding that you should have to control. In rest of all the situations, you become a related person of the other person. Now, if I become a related person, then what? Then we have to be careful about Schedule 1. Because if you do any transactions between that related persons, there is no consideration. Department can deem it to be a supply and ask us to pay GST. Related person we have known. Who is the distinct person? The difference between a related person and a distinct person is a very interesting one. Before we get to that, we'll finish the further provisions in respect of who is a related person. A person who are associated in the business of one another, that one is the sole agent or sole distributor. Now this is something new. It was not there in the original model law. Subsequently, it was introduced. What we have to carefully observe here is they are not talking about agent and distributor. They are talking about sole distributor or sole agent or sole concessionaire. Who is a concessionaire? I'll give an example. In a joint venture transaction, the landlord gives the land to the builder. The builder will construct it and give it to the landlord. Who will sell it? The landlord will only sell it. So the builder's service is rendered and the concessionaire happens to be only one person, and that person is that is the only person who is able to interact. That means he is the person who's being the concessionaire in the whole transaction. He becomes the sole agent or sole distributor or sole concessionaire. Then the transaction between the two of us is related party. But I have 25 agents. I have got 25 distributors. I am interacting with all of them. Principal and agent are not related person. I have got only one agent. Through that agent only I will operate. Then that agent and principal are related person. So that is the final point on related person which one has to be aware of. So the 8 types of relationship plus one more relationship which we have to add. sole agent, sole distributor, or sole concessionaire. If this relationship exists between two people, then they are considered to be related persons. In what way a related person is different from a distinct person? That is what we are going to see next. A distinct person is defined in section 25 subsection 4. And who is a distinct person? A person who has obtained or is required to obtain more than one registration. Fine. Whether in the one state or more than one state, shall in respect of each registration shall be treated as a distinct person. So what are they trying to tell? What they are trying to tell is, a distinct person is the one who has got a different registration than me. But so is a related person. Correct. A related person will also have a different registration. But the difference between a distinct person and a related person is, distinct person and me will have the same PAN. A person who has obtained or is required to obtain more than one registration. I have an office in Chennai, I have an office in Bangalore, I have to get registered in Tamil Nadu once, I have to get registered in Karnataka once. I may want to operate in only one place, but I am mandatorily supposed to get registered in Karnataka because I am having stock in both the places. I am selling in both the places. My total turnover is more. So I have to get registered in Tamil Nadu as well as in Karnataka. Then I am required to get registration in Karnataka. So my PAN will be the same, but my GSTN will be different. In Karnataka, it will be starting with 29. Tamil Nadu, it will be starting with 33. But what is the point? The point is, my Tamil Nadu registration and Karnataka registration are considered as distinct person. They are related person. Why? Related person is somebody who is not having the same PAN, who is related, but it's a separate entity, separate person. But distinct person, same PAN, but different registration. In the same example, I'll add a piece of further twist. I have got a registration in Chennai, I have got a registration in Madurai, which is another city in Tamil Nadu, and I have got a registration in Bangalore. 3 places. Now, Chennai to Madurai, what is the transaction called? Chennai to Madurai, the transaction is called distinct person, because whether you have obtained the registration on your own or whether the registration is mandated by the department to you to get, doesn't matter. In either of the cases, you have more than one registration, then every registration and the other registration of yours shall be deemed to be distinct persons. And this is why stock transfer between the same organization from one registration to another registration is taxable under GST. Because of this entry only. What is that entry saying? Any transaction between related persons or distinct person without consideration shall be deemed to be a supply. And this is why it is deemed to be a supply. And this is why we are paying GST on such stock transfer. But now the pinching point of this whole transaction is what I'm going to go through, which is, it is not just restricted to goods, it extends to service also. So what? This is what has given rise to one of the famous advance rulings in Karnataka called as Columbia Asia Hospitals, where they have said, your hospital in Bangalore is rendering services to the same hospital branch in Kolkata. Then you are rendering services. Take for example a bank. All the banks in India will have a forex branch in Mumbai. So any forex transaction in Tamil Nadu, is it rendered by the forex branch in Tamil Nadu, or is it consolidated and rendered as a service by the Mumbai branch? It is obviously done by the Mumbai branch. But Mumbai branch is rendering services to the customer, or Mumbai branch is rendering services to the Chennai branch? The obvious answer is Mumbai branch is rendering services to Chennai branch. So what does it make, or what does it end with? It means there is a supply between distinct person. Mumbai branch is rendering services to Chennai branch without any consideration. Sir, we don't charge anything. That is when it becomes deemed supply. No? If you charge anything, then it will not come under Schedule 1. So I don't charge anything. Then what happens? Then you become very well covered under Para 2 of Schedule 1. You are deemed to be a person making a supply, which is deemed under Schedule 1, and you are liable to pay GST on that. So transactions of goods or services between related persons or distinct persons without consideration shall be deemed to be a supply. related person is defined under section 15 explanation. Distinct person is defined under section 25 subsection 4 of the CGST Act. It is still not over. It will get further interesting now only. There is a proviso to the second para. The proviso says, provided that gifts not exceeding 50,000 rupees in value in a financial year by an employer to an employee. I repeat, by an employer to an employee shall not be treated as supply of goods or services or both. So, having said that employer and employer related person, where is it told? Section 15 explanation. So, employer-employee related person. And these two related persons are doing a transaction. What transaction? Employer is giving free. He is giving gift worth rupees 50,000 in a year. Then it will become a supply as per 2. But they have inserted an exception by this proviso saying, okay, if the employer is giving any gift to an employee, but not exceeding 50,000 rupees, then it is not exceeding 50,000 rupees in a year per employee, then it shall be treated as not a supply. So it shall stay away from the definition of supply. This is what is the exception, minus of minus. We are seeing deemed supply. In deemed supply, if something is an exception, it means it will go away from supply. But it is gift exceeding rupees 50,000 given by employer to employee. I will post in question, see whether you can give your answers in the chat. An employer is conducting a family fun day. In the family fun day, all the employees' family is also participating. They are giving a gift worth rupees 45,000 to the winning spouse. They are giving gift worth rupees 45,000 to the spouse who is winning the event. Now, that 45,000 rupees gift given to the spouse of the employee, is it covered under this exception? What is your answer? Yes or no? You may give your answers. I'll repeat the question. Employee fun day is conducted where gift is given for 45,000 rupees to the employee spouse. Is it a supply? Yes, no. Okay. So I'm hearing the word not a supply, not a supply, not a supply. Good. I will just add one more twist to it. See whether you can give an answer. I have taken ITC on the gift which I purchased. I have taken ITC on the gift which I purchased. Now, is it a supply? Yes, it will become a supply because first, to answer the first part of the question without the twist, sir, I am procuring goods. I am not taking ITC. I am giving it free. I am giving it to employee's spouse. Doesn't matter. 50,000 doesn't matter because only for employee 50,000 matters. Employee's spouse is not mentioned here. So employee spouse, you can give any value, no problem. But that will get covered under 1 because 1 says any business asset on which ITC has been availed, if it is given free, then it will attract deemed supply. So you have to be reading both together. Now, I will take you back to that example. As I said earlier, you would have made up your mind for the first example. Now we'll revisit that example. Please go through this example. On the day of retirement, he is given the car and the laptop for performing the official duties. Please tell me whether it is taxable or not. Actually, it is a practical situation which we saw in one of our clients' case. 2018, 31st March, this gentleman retired. I went there for GST audit sometime in 2019. I found this and I said something which I will tell you now. But before that, you please analyze and tell me. If it is going to be straightforward yes or no, I'm not going to ask you this question. So, okay. The car had a written down value of 8 lakhs. The laptop had a written down value of 45,000. Now, tell me the answer. Okay. Now I'll give you my view. What happens in this case is we had to analyze all the provisions under GST because the car, I have not availed ITC on the car. I'll repeat, I have not availed ITC on the car. So I gave the car free. So as per para 1, it should not become a supply. Correct? Yes, Mr. Karthikeyan is giving the same view. It should not be a supply. But unfortunately, 50,000 limit is put in para 2. So as per para 2, if you cumulatively exceed 50,000, it is not per instance, it is per employee per annum. Employee in a year. It means what? One employee, 1 year. If you exceed 50,000, in number of times you give gift, but totally it should not exceed 50. The moment it exceeds 50, you are gone. Both will become a supply. Sir, car can I exclude? Because of 50,000, car will become a supply. Laptop can I exclude? Laptop you availed ITC, no? Car is given separately, how will it become a supply, sir? Car is given separately, still it exceeds 50,000. Oh, 50,000 is a limit which is put in para 2. Correct. 50,000 is a limit put in para 2. Now, another interesting question comes up. Sir, how can a retired employee be considered as employee? On the date of retirement, it is given 31st, last day on which he is leaving the employment. So there is no way you can say that he is away from employment. He is very much within the employment. We have to take that into consideration. Okay. So that is what is the critical aspect or the critical point that I want to highlight in the reading of these two. So, Rekha, I'm trying to unmute you, but I'm not able to. Maybe we'll take the questions at the end, ma. I'm not able to browse and. Yeah, Rekha, I can ask you a question. I have unmuted. Okay, maybe she didn't want to. Fine, let's proceed with the next aspect, the third situation. But before that, one more example is staring at our face. AK Limited is manufacturing organization in the outskirts of Chennai. It provides food and transportation free of cost to its employees. Is this food and transportation taxable under GST? First point, when they are giving it free, will it attract tax? Second, will it warrant taxability if AK Limited is recovering a portion of the cost incurred? They are not recovering the full amount. They are incurring only a portion of the amount. In that case, will it become taxable? What is your answer? For the first part, what is your answer? Let's go to the second part later. They are giving food and transport free to their employees. Free. Is it considered to be taxable? So we are getting to see not taxable more, but look at the provisions of the law. It says employer related person. Then anything the employer is giving free will obviously have to become a taxable. Yes, and then you will try to see, sir, it is less than 50,000 means then what? Please tell me, gift is one time or gift is every day? Can we call everyday food and transportation as gift? It is not possible. So in that case also, it will become a supply. It will squarely become a supply, even if you are not collecting money. If I am collecting money, let's say instead of 100 rupees, I am collecting only 10 rupees. Is it fine? In that case also, it is a supply. There is no doubt. You have to pay GST on that. But the point is, on what value you will pay GST, we will see it in the valuation part. But for now, we can say that a company which is giving food free to the employees will certainly become a supply. Even if they do it for a subsidized rate, it is a supply. If they do it free, it is still a supply for the purpose of GST. Because para 2 of Schedule 1. We'll move to the next aspect, which is the third para of Schedule 1. Supply of goods by a principal to his agent, where the agent undertakes to supply such goods on behalf of the principal. any movement of goods between the principal and the agent, what will happen? The goods will move from the principal to the agent. Same way, it will move from the agent to the principal. They will do invoicing between themselves. No, the agent will get only a commission. There is no invoicing. But GST says, even if there is no consideration, I am selling all my television sets to my agents. All my television sets I am selling to my agent. Then what I would suggest you to do is please accumulate your question. In another 15-20 minutes, we'll take the questions after we finish Schedule 1. So Schedule 1 para 3 says, if it is going to be an agent transaction, even if you guys do not want to consider it to be a supply, I want it to be considered deemed as a supply, even if there is no consideration. I have got 100 television sets. I am LG. I am sending the 100 television sets to Vasant & Co. Vasant & Co is my agent. He is not buying. So Vasant & Co will keep it in the stock. When he sells, that is when it is considered to be my sale. Fine. It is going to reside there. But when I move it from LG factory to Vasant & Co, is it not a supply between a principal and an agent? Yes. There is no consideration. Still, you are supposed to raise invoice and pay GST on it. One. And second, any movement between agent and principal, principal to agent, downstream transaction, agent to principal, upstream transaction, both are treated at same only. Any movement of goods between agent to principal, principal to agent, deemed to be a supply, even if there is no consideration. Para 3. So now you can see para 1 was dealing with goods. Para 3 is also dealing only with goods. Para 2 was dealing with goods and services. Now to take it further, we move to para 4, which is the amended provision as of today, which talks about import of services by a taxable person. Earlier, this word was not there. It has been inserted only after the 1st February 2019 amendment. Import of services by a taxable person from a related person or from any of his other establishments outside India in the course or furtherance of business. What is the importance of this? The importance of it is, if I am a business entity in India and I get services from outside India for running my business from my related party outside India, then I am liable to pay GST. How will this practically happen? I'll give an example. Coca-Cola India is manufacturing Coca-Cola, but the brand Coca-Cola is not owned by Coca-Cola India. It is owned by Coke Inc. in US. That Coke Inc. will give it to their subsidiary and say, you please use the Coke brand. They will use the brand and they will do services in India, but they will not pay any money to their holding company because they are only a 100% subsidiary. But department will say, whether you pay any money to the holding company or not, it is an import of service. How it is an import of service? It is an intellectual property right which is being used in India. You have given it from there. Oh yes, then you are using it in India, correct. Who is giving it? Related person. Are you paying any consideration? No. Then it becomes deemed to supply under Schedule 1. If I am importing any service from a related person or any of the other establishments, it is like Coke US. I could have even purchased it from or got it from Coke Australia, not a problem. But it is my related person or any establishment outside India. I am taking the services in the course of furtherance of my business in India. Then even if I do not pay a single rupee consideration, department will step in and say, there is a supply and you have to pay GST. This IPR is the major area that they are trying to catch here. IPR, agency services. Or an Indian company, they scout business from outside India. In those cases also, it happens where the taxable person in India is expected to pay under reverse charge. I'll give you one more example for which a show cause notice has been issued by the department recently, and then we will take some questions on whatever has come so far. The first point is all financial institutions, banks, they have got their own brand, SBI, HDFC and all, but they are floating financial services company, SBI Life, HDFC Life. And this SBI Life is using the same logo of SBI. HDFC Life is using the same logo and tagline of HDFC. Show cause notice worth 395 crores was issued by the department asking, you are using the intellectual property of related person as per our discussion on para 2. Supply of goods or services between related persons or distinct person. It is used in the course or furtherance of business. You have not paid them any consideration. Why don't you pay GST under deemed supply, para 2? They didn't have an answer at all. They had to pay because they have used the brand of the holding company and they did not pay any brand related royalty to the holding company. So department said no consideration. It is deemed to be a supply. This is a practical case which has happened in last December. So from there, you can take a cue as to how powerful this deemed supply under Schedule 1 is. So what I'll now do is, all those questions of yours, please post it in the chat box. Whatever has come so far, I'll try to answer. One question. Yeah, I have one small doubt. I bought a laptop before GST introduced with VAT and service tax. Our company is not having VAT registration. They have only service tax registration. They claimed service tax alone. When I am selling the same laptop right now, whether GST attracts. If you are selling it to the extent of ITC availed under the excise regime, you will have to take it into consideration. So you're not availed on the VAT portion. Still, what you availed should be taken into consideration. The other question that I can see is, the cost is borne by the company as per the contract of employment. Will it get covered under Schedule 3? You are right. We will go to Schedule 3 and yes, I will enlighten you on this in Schedule 3. Sir, how to calculate? How to calculate the tax? Understood, sir. How to calculate the taxable value? That is where department will adopt any method as mentioned in the valuation rules. We'll be seeing in the next week. By Wednesday next week, I'll be explaining you the valuation method by which department can arrive at as per rule 27, 28 and 29. That time you will be able to know what is the value that they will take. What will be taken as value of supply? Yes, I have answered that question. Two different people have asked the same question. I think I have answered that. Good. Now we will continue with the next aspect, which is the another element which gives a new dimension to GST. That is this element, which I have colored in green. Certain activities or transactions shall be treated either as supply of goods or supply of service as referred in Schedule 2. One of the major problems that got resolved for many of us is this, by introduction of GST. Because before GST, we always had a problem to convince whether it is a goods or a service. Best example, food items. Before GST, on food items, VAT was also there, service tax was also there. So we had both. And for construction, works contract, we had service tax also and we had VAT also. So we were wondering how that we will be able to come to a single tax, and GST has done that. What it has done, it has introduced a Schedule 2. Why are we reading it in supply? Because supply definition says that you have a confusion as to whether something is a supply of goods or something is a supply of service. Please refer Schedule 2, you will get the answer. And what is Schedule 2 telling is this. It talks about various situations. I am dealing one by one. When it talks about transfer, what transaction will become goods? Whenever there is a title transfer, I transfer the title to you, I transfer the ownership to you. Title transfer, as per the Sale of Goods Act, can happen in either ways. One, I can make it happen by way of delivery. Two, I can do it by transfer of document of title to goods. In any one of this way, I can transfer it to you. Then that is considered to be a supply of goods. Title is transferred, it is supply of goods. So title is not transferred now. Title is transferred at a future date. I'll repeat, title is not transferred now. Title is transferred at a future date. The transaction that they are trying to mean is hire purchase. Why? Because in case of installment, title will be transferred on day one. Payment will only be made in installments. But in case of hire purchase, till the time you make the last installment, it is considered to be the asset of the seller only. So only when you make the last payment, it will become your property. But that transaction is also treated as a supply of goods. I'll repeat. Transfer of title at a future date is considered to be supply of goods. What is the big impact of this? If you are buying something on hire purchase, your monthly rental, please see the hire purchase EMI. The tax on the EMI will be there. And that tax will be the rate at which the goods are taxable. It will not be the rate for service because what you have purchased is goods. Sir, I am paying only for 5 years and after the 60th installment, it will become mine. Correct. Then every month what you pay is for transfer of title of goods. So every money, every invoice that they raise for claiming the EMI, that is considered to be supply of goods. And the tax will be at the rate at which the goods are taxable. That is the critical thing. So if I am buying a car, getting financed by a bank, that is different. If I am buying a car from the car company itself, where it is given on a hire purchase scheme by the company itself, car company itself, then it becomes title transfer at a future date. In that case, every month EMI, I have to pay GST also. That is what is the main thing here. And then when it comes to service, transfer, can there be a service? Sir, there is a transfer of goods. Everything that is transferred, that is right, undivided share, everything is transferred. Only thing that is not transferred is title. Ownership alone is not transferred. Everything is transferred to you. You have the right to use it. You have the right to maintain it. Everything is given to you. Then what happens? Then it is termed to be a supply of service. It is not termed as a supply of goods for the purpose of GST. For example, there is a lorry. The lorry owner comes and parks the lorry in our factory and says, sir, do whatever you want with this lorry. Drive it, take it around, use it for whatever you want. Every month pay me a rent. That's all. Then that rental is considered to be a service only. But for all practical purposes, you are the owner. You have every right on it, but there is no title transfer. So it is considered to be a service only. So when it comes to transfer, 3 different transactions, 2 different outlooks as to first 2 are considered to be supply of goods. The last one is considered to be supply of service. Where is it told? Schedule 2. The next one is land and building related transaction. So land and building related transaction, first of all, I want to clarify, there is nothing defined as goods. So land and building related transaction, please forget, there is nothing relating to goods that will come there. So everything will be relating to service. And what is it that is relating to service? Lease, tenancy, easement, license to occupy. What is lease? I get a long lease of land, considered to be a service. 30 years lease from Citco. I will construct my factory. No problem. 30 years lease is considered to be a service. Tenancy. I get the right to be a tenant there. Considered to be a service. Easement. For reaching my land, I have to go through your land. So you are giving me a pathway and saying you go through this path, but for this path you pay me 10,000 every month. Easement. I am not going to stay on that path. I am going to only use that path to reach my land. That is called easement. Or license to occupy. Department gives you a license to occupy a particular place, for example, mining or any such activity where you are given a license to occupy a land. All these are considered to be a supply of service. All these are pertaining to pure land. Now come to the building part. Leasing, letting out. Leasing or letting out of building, whether it is commercial or residential, whether it is let out wholly or partly, is considered to be a service. Sir, then renting out residential property is considered to be taxable service? Yes. But later on, when you see exemptions, you will see that there is an exemption for that. But is it taxable? Yes. Is GST applicable? Correct, applicable. But department has given an exemption. So can they make it applicable from tomorrow? Possible. So in relation to a building, letting out, lease, whether it is commercial or residential, or whether it is given wholly or partly, it is considered to be a supply of service only in the eyes of GST. The next one, which in yesterday's session Ganesh should have handled, about job work. Any treatment or process to other person's goods is deemed to be a service. Any treatment or process to other person's goods is deemed to be a service. I'm sure a question would have been posted. Or if it is not, I will ask that question, see whether it's a new question. I am a bus bodybuilder. I do the bodybuilding of a bus. So what you should do is you should give me the bare bus, which will contain only the engine and the basic portion called the canopy. You give it to me and I will have to construct a bus body with the way you want. I can give 3 seats, or I can give pushback, or I can give sleeper. Whatever you want, I will construct and give it to you. Now, am I considered to be a supplier of service? I will buy steel. With that steel only, I will make the body of the bus. and I'll give the finished bus to you. Am I doing job work? What is your view? Yes or no? Bus is yours. I am constructing body on it. For body, everything what I am doing is, everything is purchased by me. I purchase everything and I do. Am I considered to be a person who is doing job work? Yes or no? Absolutely, yes. It is considered to be a job work, because what they have told in the definition is that if you do treatment or process to other person's goods, they have not told you should not add goods. You can add goods also, but your output is considered to be service. Sir, I am a textile dyeing unit. You will give me plain white cloth. In that white cloth, I will do dyeing. Dyeing means what? Coloring. That dye is purchased by me, no? The dye color. That is goods, sir. But that goods is given as part of my service. Dyeing is a service. For doing the dyeing, putting that kind of dye color and all, I am using my material. Is it fine? Yes. Is it considered to be a supply of service? Yes. That is what Schedule III says. So treatment or process to other person's goods is deemed to be a service. And speaking of service, I wanted to speak about the circular up front itself about job work. Circular number 126, given in 2019, very, very, very important circular for job work. 22nd November 2019, it was given. What is the importance of circular is that it has given us the rate of tax. How to determine the rate of tax, especially from 1st October 2019, the department reduced the job work GST rate from 18% to 12%. Job work GST rate from 18% to 12%. So there were a lot of doubts. I want to share with you the circular's summary. The summary of the circular goes something like this. The HSN under which the job work will fall is 9988. 9988 is the job work services related HSN. And there it says, if for certain job work, if the rate is specifically mentioned in the rate notification, then that will only apply. I'll repeat, for certain job work, if the rate is mentioned in the rate notification itself, that will only apply. For example, in case of printing job work, it is given as 5%. In case of bus building job work, bus bodybuilding job work, it is given as 18%. So in these cases, specific rate is given, specific rate will only apply. And where no specific rate is given, 12% shall apply if it is received from a registered person. I'll repeat, where no specific entry is given, but if it is received from a received by a registered person, it shall be 12%. In any other case, it is 18%. That means there is no specific entry and it is received by an unregistered person. In those cases, it will become 18%. So this is the summary of interpretation of taxation of job work. First, job work is a service. Come what may, it is a service. And how it is taxed? Incidentally, there was a circular which I have discussed right here. So now we will move forward. The other transactions under Schedule II, which is considered to be either supply of goods or supply of services. Transfer of business assets. The assets which are belonging to a business, when it is transferred, will it be considered as supply of goods or supply of service? Two situations possible. One, when the use of business asset is happening for personal purpose or non-business purpose. I will repeat, when the business assets are being used for personal or non-business purpose, department has the right to say that it is a supply of service. Office asset is being used for personal purpose. It can be called as a supply of service. So how will they find out? How will they value? That and all, we have to wait and see what the department can do. But do they have the right to do that? Do they have the legal extent to do that? Absolutely, yes. They have the legal right and extent to do this. And when it will be termed as supply of goods? When it is a business asset and it is no longer going to form part of the business. How is it possible? There is a business asset. The partnership business asset is withdrawn from the partnership and it is given to a partner. A partner takes the business asset as drawings. Then what will happen? That will be considered to be supply of goods. It is considered to be a supply. So how is it a supply? Business asset is no more business asset, no. It is considered to be a supply. And the third situation is very interesting. When a taxable person ceases to be a taxable person. How is it defined? Look at it. I am a taxable person so far. I decide to become a unregistered person. I surrender my registration. Then what the law says is, on the day you become an unregistered person, that is, you lose your taxable person tag, whatever goods you had. So they have used the word goods. So the goods is a common term, both for capital as well as raw material. So the goods that which you had in your hand on that day shall be deemed to be supplied in the course or furtherance of business. Another place where we see the word deemed, because you would have purchased all those assets availing ITC. Now today you are stopping the business and going, means whatever the credit that you have utilized so far on these assets, you have to give it back to the department. How will they ascertain the credit? Instead of ascertaining the credit, department is simply saying, you will not be existent from tomorrow. Yes, sir, I will not be there from tomorrow. Then today, whatever goods you are having in the business, please pay GST on it and go. Transfer of business assets from a person who ceases to be a taxable person, you will have to pay GST because it is considered to be a supply under the provisions of Schedule II. And then when this transaction will not trouble us is when the business is transferred as a going concern. This is where the business assets are transferred to another person, and from tomorrow I will not be there, but the transfer is happening as a going concern. I am not transferring the assets, I am transferring the business. There is a world of difference between these two sentences. I am not transferring the business assets, I am transferring the business. What is the difference between transfer of asset and transfer of business? Transfer of asset is individual asset. Transfer of business is asset and liabilities. I am not transferring the asset only, I am transferring the asset and liabilities. So what good it will do for me? If you are transferring asset and liabilities as a going concern, even though you are transferring the assets also which are in the part of the business, it will not be deemed to be a supply. You don't have to pay GST. This is why amalgamation, merger, demerger, in all these cases, if it is transferred as a business, we don't have to pay GST. Because it is not covered under the supply of goods. It is not at all supply. It is not a supply at all. That is the transaction. Why it is not a supply? Because it is away from the purview of asset transfer. It is a transfer of a business as a going concern. When you are transferring business as a going concern, there is no need to pay GST. But if you are transferring asset by asset, then every asset you transfer, you have to pay GST. That is there as a restricting provision. Moving to the next part, very, very important part of two transactions, one of which is going to attract a lot of attention because of real estate. We'll finish the first one. Two transactions which are considered as supply of service only for the purpose of GST. Renting of immovable property. Sir, earlier we saw land and building. Why there is another entry called renting of immovable property? Frankly, department only knows this. They have given land renting also, building renting also. Now they are again talking renting of immovable property. Maybe what they try to mean is, apart from land and building, there is an immovable property. Like, for example, there is a windmill, or there is a lift, which is immovable, which is not building, when it is given as rental. That is what I think they try to mean here, renting of immovable property. It is considered to be a supply of service, no doubts. Now, construction of a complex, building, civil structure. Construction of any complex, building or civil structure. So don't think complex means it has to be big. Any 1 + 1 is also a complex. Ground floor is also a complex. Any complex building, civil structure intended for sale to a buyer. I am intending to sell it to a buyer. That should be there. If I am constructing for my own consumption, it will never come under service. It is treated to be a supply of service, but with an exception. Except entire consideration is received after completion or first occupation. Construction of a complex, building, civil structure intended for sale to a buyer is treated to be a supply of service, but it will not even become a supply of service when the entire consideration is received after completion. Completion means completion of the building or first occupation. In my area or in my state, there is no procedure called completion certificate. Then no problem. First occupation. Take the first occupation. From that day, it is considered to be completed. So any consideration received, that is full consideration received after the completion, you don't have to pay GST. But if any part of the consideration, look at the wordings, the entire consideration should be received after completion. But if it is not satisfied, that means even if you have taken 101 rupees as advance before completion, then GST will become applicable for the construction service. And one of the key services that applies in GST, which needs further deliberation. Now, I have taken a simple example of the popular real estate transaction, trying to explain how the supply happens here. In any real estate transaction, there will be three people, especially if it is of the nature of joint venture. There will be a landowner, there will be a builder who will be a developer also, and there will be a buyer. First, what happens? The landowner is giving the development rights to the builder. Sir, please come into my building, develop my building. That is what he is saying. So the builder is developing the building. What do you mean by developing? Constructing an apartment, getting approvals and all that. So the right to develop is given by the landowner. So landowner is giving a service. And then builder for that is giving consideration by way of another service. Builder is not paying him money. Builder is instead saying, sir, I will construct apartment and give it to you, sir. You give me the land, I will construct 10 apartments. In this 10 apartments, 4 belongs to you, landowner, 6 belongs to me. How will the builder be able to do? That is what he is doing. He is getting the right as a service. Instead of paying for the service, he gives the consideration in kind by giving construction service. Now, landowner has got 4 apartments, builder has got 6 apartments. How will they sell? The landowner will be able to give it to the buyer, or the buyer may purchase it from builder also. He can buy from the 4 or he can buy from the 6. In both these cases, the landowner or builder is considered to be the person who is rendering the construction service. In both the cases, the landowner or the builder is considered to be the person who is rendering the construction service. This is what is considered to be a situation of taxability in a real estate transaction. So look at it. There are 3 different services that are there. A development right is a service which is taxable. A works contract or a construction service by the builder to the landowner, it is taxable. And then ultimate buyer of the apartment is getting construction service. That is also taxable. That is how the important this service. That is why they have said construction service is supply. Construction service is considered to be a supply of service, provided the entire consideration is received after completion. Then it is not considered to be a service at all. It is not even coming within GST. If any part of the consideration is received before obtaining completion certificate or first occupation, then it becomes a pakka taxable service. And how the taxable service will pan out, I have just shown you in your screen. Now the taxability of it also we will see. Nowadays, department is using a term called as residential real estate project. REP means real estate project. If it is a residential real estate project, there is a commercial also there, but the commercial is not exceeding 15%. Maybe down ground floor, there are 2 shops. That's all. Rest all is residential. Then it is not considered to be commercial complex. It is considered to be residential real estate project. In that, if any affordable housing means less than 45 lakh rupees in value and square feet is not exceeding 60 square meters in a city or 90 square meters in other than city. In those cases, value should not exceed 45 lakhs. If that is the case, the tax rate is 1.5%. But 1.5% land is also there. So they give deduction for the land. If you are booking an apartment for 30 lakhs apartment, land is also there, building is also there. So the department is saying, I will give you deduction for land for 1/3, which means 10 lakhs you deduct. You pay GST only on 20 lakhs. So effectively on 1.5, you deduct 1/3, you will end up with the effective rate of 1%. That is what is considered to be affordable residential. And if it is going to be other than that, it is not less than 45 lakhs, it is more than that, then in all those cases, it is 7.5% is the taxability, but effectively 1/3 deduction for the land. The tax rate will become 5%. But remember, in all these cases, there is no input tax credit. And finally, if it is a commercial which is within the residential real estate project, then it is same 7.5% land, 1/3 deduction, effective rate is 5%. This is what is the taxability of a residential real estate project. Anybody is venturing into a residential real estate project, we'll have to tell them. And this is the taxability for the construction service. We saw 3 services. We saw one service called construction service, development right service, and then works contract. Construction, this is the answer. And if it is going to be a commercial real estate project, it will change like this. In case of a commercial real estate project, residential is there also there. There is no change. It will be the same. But commercial real estate project, whatever is commercial, in that 18% is the taxability. 1/3 land deduction is given. Effectively, it will become 12%. So commercial taxability is different in case of a real estate project. And then the taxability from a residential standpoint is also different. Construction service, how it is taxable is evidenced by these rates, which are derived from the latest notification 3/2019, which is given in March 2019 and made applicable from 1st April 2019. So this is how the real estate transaction happens. We have just seen where the right to tax the real estate transaction has come to the government. It comes from Schedule II. And there they have said, these are the services which are taxable. And these services are taxable in this manner. If it is going to be a pure labor contract, you don't have a problem because pure labor contract is fully taxable at 18%. But if it is used for a single residential unit, not as part of a complex, then it is exempted. But labor contract only, it is not works contract, it should be labor contract only. Then it is for single unit, it is exempted. If it is for any other situation, taxable at 18%, labor contract. So you should know the difference. When it is 18 becomes 12, becomes 5, becomes 1, and 18 becomes 18 only in case of labor contract. Now we move to the next aspect. Few other scenario where we'll have to see the Schedule II situations, where Schedule II goes about telling us what are those which are considered to be supply of service only. Temporary transfer of intellectual property rights. Temporary transfer of IPR, intellectual property rights, is considered to be a supply of service. Very, very important and careful. You have to make note of this. Intellectual property right is a goods. So it is intangible, copyright, patent, technical know-how. All these are intellectual property right, correct. But they are goods. Though intangible, they are considered as goods. So if I buy the intangible intellectual property, it is considered as supply of goods. It is not service. But I am not buying the copyright. I am buying only a temporary transfer. I am giving 1 crore rupees and taking the rights to distribute the movie for 1 year. And after 1 year, it will become back to yours property. Then that is considered to be temporary transfer. I am getting your approval to print the book. Once, two times I publish the book. Third time, I don't have the royalty. I have to come back to you. I get the right only to publish the book 2 times. That is what is called temporary transfer of intellectual property. Generally, for this temporary transfer, the person who is owning the intellectual property will seek something called as royalty from us. That person will take royalty. That royalty you pay, that is how we'll be able to round off the taxability. That royalty that you pay is considered to be a supply of service. But if I buy the copyright itself, then it is considered to be supply of goods. That will not come under service. The next one, which is considered to be supply of service, is design, development, programming, customization, adaptation, upgrading, anything that is done in relation to an information technology software. Sir, I am buying a software which is readily available in a CD. It's goods. But I am telling them the design, they are designing it according to my requirement, or they are developing a software according to my requirement. They are doing a customization to the standard product. Then it is considered to be a supply of service. And the third one, which you see in your screen, is the most notorious thing in GST so far. Agreeing to refrain or tolerate an act or situation. Agreeing to refrain or tolerate an act or situation is considered to be a supply of service. Agreeing to refrain or tolerate an act or situation is considered to be a supply of service. What is that? I'll give you an example. See whether you can give the answers in the chat box. I have entered into a contract with a company where I have told them that I will finish the work, software implementation within 3 months. The software implementation cost is 1 crore. That company has also put in the contract that if I do not complete it within the 3 months, then the company will charge me. The company will levy a penalty of 10 lakh rupees. I have told them that I will finish within 3 months, so you will pay me 1 crore. They have told, if you don't finish within 3 months, then we will penalize you for 10 lakhs. I am not finishing the project within 3 months. It takes me 4 months. So now I should raise an invoice for 1 crore, or should I raise it for 90,000? What is your answer? I am the software company. I am raising the invoice. Should I raise the invoice for 1 crore or should I raise the invoice for 90,000? I should raise the invoice only for 1 crore. Why, sir? Then what about the 10 lakhs? The 10 lakhs is the other party, he is rendering a service to me. What service the other company is rendering? The other company is agreeing to tolerate the delay. He is agreeing to refrain from filing a case against me. Then that is considered to be a classic situation of rendering of service. Another example which I will give, which will easily resonate with all of you, is employee notice period pay recovery. Employee is employed with the company. He decides to quit the company. On quitting of the company, he is giving notice, but the notice he should have given for 3 months. He is saying 1 month you relieve me. Fine, I take the money from the employee. Is it considered to be a money taken by the company to tolerate the early relieving? Yes or no? If your answer is yes, is it a supply? The money is taken from the employee to relieve him early. Instead of serving 3 months, he is leaving in 1 month. So that money that is taken, is it considered to be a supply of service? Absolutely yes, because the employer is taking the money from the employee. And in this case, the employer is taking the money and keeping quiet. He is taking the money not for employment purpose. He is taking the money not to sue the employee for not serving the notice period. So it is a service rendered by the employer to the employee, agreeing to tolerate or to refrain from an act or situation considered to be a supply of service as per Schedule 2. And further, we move to the very, very tricky aspect. If I give the right to use any goods, if I give you the right to use any goods, then it is considered to be a supply of service. There ends the GST law, but I wanted to give you a practical angle by the third column that I have put here, which is very, very practically relevant and important, which says, if that is what is happening, then that is, I am giving you the right to use any goods. I am giving you my car and I am saying you have the right to use. I am giving you the crane and I am telling you, you have the right to use. You do whatever you want, operator you employ, repairs and maintenance you take care, running cost you incur, everything you do. Then it is given with the right to use. So you should not treat it as renting and charge 18%. The tax as per notification 11/2017 CGST is same rate of integrated tax in case of IGST notification. Integrated tax as it is applicable on the supply of goods involved in the transfer of title in goods. If I sell the crane to you, what is the tax that I will charge? That rate only I should charge even for the rent if the right to use is also given to you. I'll repeat, if the right to use is also given to you, then it is not mere renting. It is renting as a service, but the tax rate is not 18%. The tax rate should be the rate which I will charge for the actual supply of those goods. That goods at what rate I will sell. That is why you will see, interestingly, if cars, costly cars, BMWs or Audis are hired for the purpose of management people, the right to use is given to the management person. Sir, you do whatever you want. Then GST will come and say, on that rental, you should not charge 18%. You should charge 28% GST because that is the rate on which the car is sold. And you should charge 22% compensation cess also. Because when the car is sold, compensation cess is also applicable. That's why some of the service providers will collect both from you for their service because they have given you the right to use. So right to use is taxable at the rate at which the underlying goods are taxable. It is a service, no doubt. But the service tax rate is not 18. The services tax rate is the rate of the goods, underlying goods. Moving to the next aspect, the key part, which we will be dwelling for the next 15-20 minutes, which is the aspect of composite supply. What is a composite supply? A composite supply is defined in the provisions of Section 2 of the CGST Act. We will go through the definition and then we will come back to this distinction between what is a composite supply under Schedule 2 in terms of works contract and the supply of food or drink. Composite supply means any. Okay, so now what we can do is we can, for the moment, park this composite supply of services definition, which we will take up after we finish Schedule 3. So now what I can tell you is composite supply of services can be two. One, works contract. The other one is supply of food and drink. We had discussed this already, where I told you at the start of Schedule 2 that the major problem that we had during the service tax and the VAT regime is that this works contract was considered to be taxable under both. Food and drink was considered to be taxable under both. So how that problem has been done away in GST is that, yes, there is an element of good as well as service in case of works contract. Yes, there is an element of goods as well as service in case of food and drink. And drink is other than liquor, anything other than liquor. So if this is what is going to be there, then department has said, let us take a stand that service is predominant. So the transaction is considered to be supply of service. So they have decided in favor of service. Yes, there is an element of goods plus there is an element of service, but which is principal? So in a works contract, there is no doubt there is a supply of material plus service, but it is deemed to be a composite supply of service. Where is the deeming? Deeming is in Schedule 2. Supply of food or drink other than liquor, it is deemed to be a supply of service. Yes, there is goods, but which is principal? The principal is considered to be a supply of service. So hence it is treated to be a supply of service. So two transactions are very well known and litigated in the past. Department has put an end to any doubt in GST. Both are considered to be supply of service. And this works contract, I want all those people who had seen the works contract definition in the earlier law to pay close attention, because GST, there is a tectonic shift. Works contract means a contract for building, construction, fabrication, completion, erection, installation, and all that, renovation, alteration, commissioning. But the key thing is of any immovable property. So what is works contract in GST is it should be pertaining to any immovable property, and where there is an element of goods also in the execution of that, no problem, but it is considered to be works contract. So earlier, before GST and after GST, the definition of works contract has got substantially changed. Today, if I am going to paint a house, it is called as works contract because it is done to an immovable property. But if I am going to paint a car, it is considered not as a works contract. It is still considered to be supply of goods only. Why, sir, it is considered a supply of goods? Because immovable property, anything done in relation to immovable property is only considered as works contract. So works contract, there are three elements. There is goods, there is service, but there should be an involvement of immovable property also. It should be for immovable property. Then only it is considered as works contract. But that was not the case in the old law. In the old law, it was wherever there is goods plus service, it was called works contract. not in GST. This is the basic difference. And now we get into the next aspect, which is the taxability of works contract. Once I finish the taxability of works contract, I will take questions and then we will go to Schedule 3 if time permits. Else, Schedule 3 can be started tomorrow. Taxability of real estate works contract related transaction. Works contract, first basic thing is, it is not construction service, meaning construction service, the word in GST means it includes an element of land. So works contract is where there is no land. Anything other than construction service is only considered as works contract. And there, if I am constructing a residential affordable housing, as I told you earlier, up to 45 lakhs value, not exceeding 60 square meters in a city, or in outer it is 90 square meters size. Then 12% is the taxability. I can do it with ITC. But if it is going to be anything else other than that, it could be a works contract for other than affordable housing or commercial construction or anything, road laying, anything. In all those cases, the taxability will be 18% with ITC for a works contract. So this is how GST treats works contract transaction, considered to be taxable under GST as a supply of service. And there also they have not used the word mere supply, they have used the word composite supply of service, and the taxability will be based on that. So what we'll do is we can now take some questions, because where we are heading is Schedule 3, activities which are neither treated as supply of goods nor treated as supply of service. That is where we are supposed to go. But before that, any of your questions which I can take, please post it in the chat box. If you are not able to type everything, raise your hand, I will unmute you, then I can discuss. Mr. Balaji has got a question, so what I can do is, I have unmuted you, Mr. Balaji. Maybe you can.
Yes.
Yeah, you can
Yes,
ask your question.
Yes, I need some more clarity. You said if it is hired, it is 18%. If a car is being hired at 18%, but the car is being sold, it will be, the GST will be around 22%, for example. Then even for hiring with rights to handle anything, it should be treated as 22%, you are saying. So one more tax component you added that I am not able to catch.
I will tell you one by one. See, if I am buying a Audi car now, the taxability is 28% GST plus 22% compensation cess.
Yes.
The total is 50%. So 1 crore worth of car, I have to pay 1.5 crores. But what is happening is, that gentleman, one man is purchasing that car and he is giving it on rent to me. Sir, is it a mere renting? No. What he is telling is, I will give you the right to use also. He will give me the absolute right to use, saying that, sir, you do whatever you want with it, you please enjoy it, and every month you pay me rent. That every month rent which I pay to him, department says, see, you are not merely hiring, you are only operating, you are only incurring the expenditure, you are only doing everything. It is considered to be a supply of service, but the taxability is not at par with the taxability of the service. It is taxability at the rate at which the goods are taxable. If the same car is sold, what is the rate at which you will tax? 28% plus 22%. Instead, you are not paying 1 crore, you are paying 1 lakh every month for 100 months, let's assume. Then department says, on that 1 lakh, you please pay GST of 28% plus 22%. That's what they have told.
What is the 22% you are saying?
22% is compensation cess, sir.
What is that compensation cess?
Compensation cess is a tax which is levied in addition to GST, and that the compensation cess is a tax which the department has brought in to compensate the revenue for the state government. It is not applicable for everybody. It is not applicable for all the products. It is applicable for only notified products. Like, for example, a motor vehicle, even if you are buying a small car, 1% compensation cess is there. So if you see the invoice, you will see 28% GST plus 1% compensation cess. More the size of the car, more the luxury of the car, the compensation cess will increase, and it can go up to 22%.
It is already notified.
It is very well notified. From 1st of July 2017, it is there. Tomorrow, when I am discussing the charging section, that time I will be telling you as to what is the compensation cess, why did it come into being and all. Okay. Ashwin is asking a question. Yeah, I'll mute you. Yeah. Ashwin is asking a question. Can we rephrase, like, if I lease the goods, it is taxed at the rate at which it will be sold. And if it is rental, it attracts 18. Ashwin, even in lease, there is a probability or a possibility that right to use is not given. So when you use the word lease, you have to be careful. You have to go to AS 19 and check whether it is an operating lease or a finance lease. If it is a finance lease where it is completely given to you and only the asset remains in the books, then yes, you will have a problem. You will be coming under the tax rate of the rate at which the goods are taxable. Okay, the next chat question has come is, can you explain the job work slide? If we are doing services which are on the goods of another person, it is considered to be a job work. That is the basic part. There, what we saw in terms of the circular that was given by the department, which I had highlighted, I'll just go back to that slide. What the department did was they reduced it from 18% to 12% from 1st October 2019. But nobody was clear how did they reduce. So department themselves came forward and issued a circular 126/2019, wherein they said, if your job work, type of job work is mentioned in the rate notification. What is called a rate notification? In GST, there is a HSN wise rate will be given for services. That is called rate notification number 11. In that, if a rate is notified for your particular service, that is where I took an example of the printing contracts. Printing contracts, the taxability is 5%. They have notified. So you have a service and the service rate is already there in the notification. Take it as that rate only. On the other hand, there is no rate specifically mentioned. For example, electrical work, job work, or machining job work, or welding job work. For all this, there is no rate mentioned specifically. But this is the service which I am receiving. I am an engineering company. I am receiving welding services. Then in those cases, the service is taxable at the rate of 12%. So department has amended and said, sir, anything other than specific, it is 12%. And then they have said, when it is received by an unregistered person, see, when it is not specified, received by a registered person, 12%. So department wants to give the benefit of 12% only to B2B, not to B2C. If it is a job work service, which is not specifically mentioned as this rate, but received by an unregistered person, GST is 18%. This is what is the job work related clarification that has come in the circular. We'll again go to the chat box for the next question. Okay. Yeah, textiles 5%. So textiles 5% is goods, sir. If it is going to be service relating to textiles, yes, you are right. That is what you are saying. Please explain works contract. What is works contract? Works contract is, there is an element of goods, there is an element of service. Both are there. In a works contract, what we see is element of goods as well as element of service. I can do construction, fabrication. I will do the construction. Material will be purchased by me. Labor will be from me. But what I am giving to you is an immovable property. Or what I am working on is an immovable property. On a factory building, I am doing fabrication of steel. And after fabrication, it will become immovable. Then it is considered to be a works contract. So there must be goods, there must be service, plus it is in relation to an immovable property. Then only it is considered as works contract. And for works contract, the taxability is dependent upon where it is rendered. 18% is the general one. What will be the interpretation of restaurant service? Restaurant service, there is no such word called restaurant service, man. It is supply of food or drink. That's it. Supply of food or drink, we are liable to pay GST on that, treating it as supply of service. And drink, I mean, it should be other than alcoholic liquor. So if I am a hotel, I should treat myself as a person who is rendering the service, supply of food or drink. So that case, we are supposed to consider it as supply of service and pay GST on that. How to pay staff transportation and food tax? As I said, sir, earlier, please hold on to the valuation discussion. Schedule 3 tomorrow and then valuation on next Wednesday. You will be able to come to an answer by next Wednesday on what is the method to pay the tax and what is the value on which we have to pay the tax. Yeah. Any other questions? Okay. Fine. If there are no other questions, what I can do is we will stop our session for today here. Let's catch up tomorrow, because if I start Schedule 3 now, we'll have to break it midway. So let's break now. Let's meet tomorrow at 6 o'clock, starting with Schedule 3. And then we will get into the aspects of the charging section 9, 1, 2, 3, 4, and 5 tomorrow, so that you'll be able to comprehensively understand why we studied so much about supply and why we spend so much of time. The taxability will come tomorrow. So let's break for the day. Thanks a lot. See you all tomorrow.